So I just read you the Webbot report last night. Keeping in mind it's been out for several days. I just read it to you last night. And it talked about another like Lehman Brothers collapse, right? Big giant failure coming to a country near you. And I've been watching Glencore, which is a huge mining company. Commodities and whatnot. Oh. And Goldman's been talking about Glencore, and if commodities drop just a teeny bit more, it could be the end of Glencore and bankruptcy. And I said, oh, here we go. So the banksters want Glencore. And what have I always said? The banksters never, ever buy anything for even a remotely close fair market value. They only buy when there's blood on the street, so to speak. Blood on the streets that they created. Just like when Lehman collapsed, they were bought out for like $1 something, $2. The final value was like $2 or something a share. When, just literally moments before, it was, I don't even know where their stock price was at, but it was way high. Blood on the streets, no bailout for Lehman. Then all of a sudden, after the deal's done, now we give a bailout for the rest of the banks. So essentially, you paid Goldman Sachs to buy out Lehman by bailing out Goldman Sachs and the rest of the club. And we all know where gold and silver is heading in the near future. So if you're one of the banksters, you're going to want a mining company, correct? That mines, commodities, gold, silver, etc. So, let's give a little teeny tiny background on Glencore. The Swiss commodities and mining company held on to its spot in the top 10 despite a 5% dip in revenue to $221 billion as commodity prices slumped across the board. Glencore did post a profit of $2.3 billion after losing more than 3 times that amount in 2013 following the acquisition of Anglo-Swiss mining company Xstrata. Mining and commodities giant Glencore is said to be in talks with 5 companies to sell portions of the future production of 3 of its copper mines in Chile and Peru. Future production. So we're going to get these mines up, and we're in talks now to sell it to you, what we get out of those mines. So this is the old scenario of big bank takes little bank. Big bank buys out little bank, which means Goldman Sachs and or one of their affiliate club members, whatever you want to say, is going to be buying Glencore, at least from the looks of this, because they're going to go file for bankruptcy and have to start over, and I think they're going to be bought out by one of the club members. So from Zero Hedge, update, and there it is. Glencore debt insurance or credit default swaps costs surge to record high. 5-year credit default swaps rise 154 basis points from Friday's close to 708 basis points. Just last Thursday, we asked whether Goldman was, quote, preparing to sacrifice the next Lehman, by which, of course, we meant the world's largest commodity trading counterparty, Bar, Switzerland-based Glencore, which just 2 weeks ago unveiled an unprecedented doomsday capital raising and deleveraging plan, which, in retrospect, was not enough. Oh, wait a minute, this isn't enough! Make it enough. The punchline of Goldman's report was that if commodity prices drop 5%, or even stay where they are, then Glencore's investment-grade rating, the most critical foundation of its entire trading operation, where a downgrade to junk would launch a collateral and margin call waterfall cascade, or another AIG scenario. Also from Goldman, Glencore's trading business relies heavily on short-term credit to finance commodity deals, and its financing costs would increase if it were to lose its investment-grade credit rating. In addition, it could even lose some counterparties due to increased counterparty risk. As we added on Thursday, what a junking of Glencore would do is start a collateral demand waterfall cascade that the cash-strapped companies simply would not be able to sustain. This is from Zero Hedge. So having laid out the straw man, Goldman next, very conveniently, explains just what it would take for the investment grade trap to slam shut. And again, it would only take that 5% spot fall, commodities prices fall in spot commodities prices for concerns about its credit rating to resurface. Of course, Glencore's leverage to commodity prices was first explained in our March 2014 post, in which we said, buying Glencore credit default swaps is the best and easiest way to bet on a Chinese credit and commodity crunch. Fast forward to Monday, today morning, when those who bought into Glencore's equity offering at 125 points less than 2 weeks ago, on September 16th, are already down a whopping 43%. We won't even bother calculating the loss since the company's 2011 IPO, he says. Following the biggest daily drop in Glencore history, with the stock mauled some 27% at last check. And today, of course, end of the month, options expiration, the rest of it, gold, silver, all commodities across the board are down. Coincidentally, I'm sure, for Goldman to say, hey, we were just talking about you, Glencore. We were just talking about if prices fell a little bit more, you'd be finished. And they fell a little bit more. And now your investment grade rating is going to go bye-bye, which means you as a company is going to go bye-bye, bankruptcy. And we got some friends who might want to work with you and give you some money, to bail you out, so to speak. In other words, we're going to own you. Here's their nice looking chart, Glencore. So he says, with the stock mauled some 27% at last check, on the heels of a note from Investec which said nothing Zero Hedge readers did not already know, but which is spooking everyone else into realizing that the commodity trading Titanic, Glencore, may be sinking. In the note, Investec notes that, quote, using a PE-based approach to evaluate equity going forward in proportion to debt, we note that the heavily indebted companies, Glencore in this case, could see almost all equity value eliminated under spot conditions, leaving nothing for shareholders. Glencore recent restructuring may prove just the start for the majors if spot prices prevail. This supports our concern that we are still a distance from the value point in the sector. In other words, even if commodity prices remain unchanged, Glencore equity could be a donut. If commodity prices continue dropping, then, well, just read out, or I think he meant to say read our prediction from last year. It also means that bondholders are next in line to hold the equity after a debt for equity, which has also pushed Glencore's bonds to record lows, with the Glen 1.25 billion notes due March 2021 dropping 3 cents to 78 cents on the euro, while the $750 million bonds due March 2025 declined 4 cents to 67 cents. Both are at record lows. If and when the bondholders realize a bankruptcy would leave them with negative enterprise value when netting out all the margin calls, we wouldn't be surprised to see bonds trading below 50 in the coming months, if not weeks. Meanwhile, those who listen to our RICO to buy Glencore credit default swaps at 170 basis points in March of 2014 can take the rest of the year off. As of this moment, these credit default swaps were pushing on 600 basis points, 4 times wider, and on pace to take out the 2011 liquidity crunch highs. After that, it's smooth sailing to all-time wides and the start of a self-fulfilling prophecy which leads to the company's investment grade downgrade rating and the collapse of trillions in derivatives notionals as what may be the trading desk of the biggest commodity counterparty quiet as what may be the trading desk of the biggest commodity counterparty quietly going out of business. So the club will be buying up the mining companies. You already saw, and I already talked about this recently, not George Soros, what's his name? I cannot think of his name. Buying the Warren Buffett, I think. Buying up the mining companies, getting ready. Guys like Warren Buffett do not make mistakes. Guys like banks, like a Goldman Sachs and Club, don't make mistakes. They make everything. They are the club. They own the government. They run the government. They own the regulatory agencies. They will bail themselves out. They did bail themselves out. They are chock full of cash this whole time, waiting to pounce on all these fire sale deals that just happen to come up. So you just watch, wait and see what happens to companies like Glencore, the big boys. Let's see what happened to them and who offers to straighten out their bankruptcy or buy them out, etc. Is it going to be a Lehman Brothers event where they're, again, bought out, where they, hey, you got shareholders, they're going to get nothing or pennies, if anything. Let us buy you out, we'll give you at least a couple bucks per share, so your shareholders aren't completely wiped out. Even though it was trading at, again, 70, 80, higher, I don't even remember the number at this point for Lehman Brothers. Way up there. Better than less than $1, isn't it? Well, I guess so. So I guess we'll take this deal. And then, okay, we got Lehman. Go ahead and go forward with the bailout. Guys, get Bernanke ready. Get everybody ready. Hank Paulson, all you guys, get the bailout money ready. You got to pay me back for buying this company out for pennies on the dollar. And you're going to stock me full of cash so that in several years from now, when we really do this again, the big one comes, we have plenty of cash then to really buy everybody out. And then everything will just be us. We'll own everything that we need. All commodities, everything, they'll be ours. We'll be the one producing in the mines. It remains to be seen how this is played out. Take care.